Hey, this is Rich from Rich on Money. Today we're going to talk about VA loans, how to get a VA loan, everything about VA loans. I'm going to get through quickly. Before I do that, let me first talk a little bit about who I am. Again, my name is Rich Carey. I have a website called www.richonmoney.com. And it's a website where I talk about real estate. I have 20 properties that are paid off. They're all in Alabama. I've collected them mostly while serving overseas in the military. So I talk about how I do that on my website. I have a conservative approach to investing and to real estate, and I kind of talk about all that stuff on there. So if you want to be awesome, I recommend subscribing to my blog and subscribing to this YouTube page. Also give this video a thumbs up if you like it. And I'm going to talk about this VA loan stuff today. So leave me a comment about what you're planning on doing with your VA loan, whether you already have one or you're just trying to get one, or where you're planning on buying a house. Just let me know what your situation is. I'd love to know. All right, here we go. Let's get into it. How to get a VA loan. What is a VA loan? A VA loan is it's a mortgage that helps veterans finance the purchase of a home with good loan terms and an interest rate that are typically better than what you'd see on other mortgages. VA loans are not actually made by the VA. They're made by lenders, just random lenders. A bunch of different lenders out there will give VA loans. The VA is the one that actually gives a guarantee. The VA doesn't guarantee the whole loan. A lot of people think they guarantee the whole thing. The VA guarantees about 25% of the loan. That gives the lenders a lot more breathing room to give you a lower rate, to give you no money down, and just to make it easier for military members to borrow money. And so there's this thing called I gotta find the name of that thing, county loan limit. And the county loan limit for most locations is $484,000. Is that right? Yeah, $484,000, $350. That's like the max you can borrow no money down without having to put some extra down payment on top. When you get into more expensive areas, it's actually higher than that, like Honolulu, Denver. It goes up to $726,000. And there's a chart that you can link to on my website that tells you what it might be for your area if you think yours might be higher than the 484. But there's no limit to how much you can borrow, but there is a limit to how much you can borrow without needing a down payment. So I just kind of wanted to point that out. Who can get a VA loan? Well, there's like this list of criteria. If you are, it's open to veterans, active duty service members, National Guard, reservists. And there's just like this list of different things depending on, if you're active duty, then you've served at least 90 consecutive days during wartime or 181 days during peacetime. You have 6 years of service in the National Guard. You're the spouse of a service member who has died in the line of duty. Like, you can go on the website and look up and see if you think you can get a VA loan. And then what you really need to do, though, is get a certificate of eligibility, a COE. And you're going to get that by talking to a lender. Well, there's actually 3 different ways to get a certificate of eligibility, but that's where you'll actually know. You'll know that you're good, and that you can get a loan. And you can get that 3 different ways. You can apply online using a VA e-benefits portal. You can apply through a VA-approved lender, or you can apply by mail using a Form 26-1880. And you'll have to provide like some proof. They'll want certain documents. And then when you have a certificate of eligibility, you know you're good to get a loan. So who can qualify for a VA loan? I guess I mean like income and credit score. I'll say a credit score of 620 is about what you need. And that's pretty low. If your credit score is like a lot lower than 620, I don't think you should be trying to get a house loan. You should probably be trying to fix whatever's going on with your financial situation and worrying about getting a house later. But 620 can get yourself a loan. The national average is 699, so it's lower than the national average. There isn't an income threshold, but they want to see stable income, and they want to see if you have enough money left over at the end of the month to pay your bills and do different things like that. You'll be able to you should get pre-approved, just like you would for a normal conventional loan. Go get pre-approved for a VA loan, and then you'll have an idea where you stand. I want to give you the pros and cons of a VA loan. Some pros. There is no private mortgage insurance, no PMI you have to pay. There's a catch to that later, but usually if you have less than 20% down, you got to pay private mortgage insurance, and that's kind of expensive. Well, that doesn't exist with VA loans. Hooray. Next pro, low interest rates. They can be as low, and then they sometimes can be lower than a conventional loan. That's because of the guarantee that the VA can give. And that's awesome. No money down is usually higher risk, but because of the guarantees the VA gives, they guarantee 25% of the loan up to a certain limit. They can afford to give us lower interest rates. Totally awesome. Thank you, VA. Thank you, government. And the next pro I want to talk about, no money down. That's a big one. Being able to finance a property with no money down is a huge blessing. It can get very interesting because you can even do no money down on a 2-plex, 3-plex, even a 4-plex. And you can live in that. You have to live in it, actually. You can live in that 4-plex. As long as you live in one of the units, you can actually rent out the others and take those all as income. In fact, the income from those other units can actually count towards you qualifying for the loan. Boy, that's awesome. Another pro, no prepayment penalty. Now, it's kind of rare to have prepayment penalties these days, but VA loans never have prepayment penalties. Here's a con or a bad part of getting the VA loan. I said there's no private mortgage insurance, all right? But there is something called a funding fee. And so they're going to get you, right? They're going to get you. You're going to pay, at least a 2.15% fee on the entire loan if you're going to be no money down. That can be rolled into the loan, but you're going to pay that. And so that's kind of like another form of a PMI, private mortgage insurance. Not super excited about that, but it's the price to pay to fund the VA and to have no money down. That can become lower, I think, as you pay 10% or 20% down. But I would argue in that case, you might as well just go with a conventional loan. The next con I want to talk about is a VA appraisal. A lot of times when you buy a house with a mortgage, the lender is going to order an appraisal, and they're going to make sure everything's hunky-dory. This is different than that. This is a VA appraisal. They're a little more anal about it. They're looking for different things. They want to make sure the house is safe, and they actually won't allow the house to be in bad shape at all. It can't be a fixer-upper. If there are a lot of things that are broken, they won't let you close. So they're more strict than a normal appraisal would be. And if they find things they don't like, they're going to make somebody fix it before closing. So there's two problems that the VA appraisal can cause for you. One is they can find a bunch of things that have to be fixed before closing and slow down or prevent the loan from going through. Number two is the appraisal can come in too low, and that can cause you to have to bring more down payment to the table to get the loan closed. Just a problem with the VA. VA appraisers I've heard, can be a pain in the ass. It's just something to think about. Again, quick pause to plug myself again. If you're enjoying this, please like it. Please share it. Tell your friends. Tell your family. Rah, rah, rah. Give me a thumbs up on the YouTube there and leave a comment for me. Thank you. The VA loan process. I'm going to go through like the loan process, pre-approval, finding a property, putting a property under contract, and underwriting. You want to get pre-approved. You just like, before you go out and find a property and make an offer, you get a letter from the bank saying, we've already looked at this guy and we're pretty sure that he qualifies for at least this much money. And so you're going to have to give them a bunch of your, W-2s and tax forms and information up front so they can give you this like pre-approval letter. And you'll want to do that. Then you want to go out and find a property, which means you want to work with a real estate agent. Should you work with a real estate agent? Because you got to pay them a big fat commission. Yes, you should. But you want to find a very good real estate agent and make sure that they're earning their money. That 3% to 6%, that 3%, they're going to get half of the 6%. That 3% they're going to get, make sure they're earning it. What I've done a lot in my career is I've told real estate agents, you're not meeting my needs. And if you're not meeting them, I'm going to find somebody else. And in some cases, I've went and found somebody else. They're going to make a lot of money from you. So make sure you're happy with them. And if you're not happy, change real estate agents. Don't sign something that means you can't change agents or something. Don't sign that exclusivity paperwork or whatever. If they want you to sign that, just tell them like, look, if I'm unhappy with you, I'm gonna change. It's just like a very common sense thing. But you need to go out and find that property. You need to put the property under contract. That's the next part of the process. Putting it under contract involves you having certain contingencies, right? You can say, I want to buy this house, and so here's my offer, and we're going to put this under contract, but I'm not going to buy it unless the following things. I'm not going to buy it unless the VA loan or the VA appraisal comes in high enough. I'm not going to buy it unless I do another inspection and I make sure that there's nothing wrong with a house that I can't accept. I'm not going to buy it, unless I get financing, right? You can put in these contingencies, and that's very important with putting the property under contract. Then there's the underwriting process. The underwriting part is like, it's under contract, now the real magic happens. Now the paperwork gets going, now the lender orders the VA appraisal, which is that thing that I actually, I've told you is a little bit scary sometimes. So that all goes on while the appraisal is going on, and you're finding out that there might be little things that have to be fixed. You can ask the seller to fix it, or maybe he's going to say no and you have to fix it, or maybe you got to walk away. While that's going on, they're looking at your financials and they're like, well, wait, this looks funny. Give us more information about this. And whenever they have a question, you just need to get them that information very fast so it doesn't slow anything down. The next part of the process, when they're happy with the appraisal, happy with all the paperwork, then you can go to closing, right? Here's the thing I like to talk about. I never go to closings. You can go to the closing. If you've never been to a closing, you might as well go to one. It's kind of interesting, I guess, the first time. It's not interesting the third or fourth or fifth time. I don't go to closings. You can have like your real estate agent that's representing you or somebody else. Just you can have a power of attorney that says you can sign for me, and you don't even go to the thing, and I don't even bother going anymore. There are alternatives to VA loans, and I'll tell you about some of them. There's something called an FHA loan. An FHA loan is something where you can get, it's something that's available to everybody, not just military members that meet certain criteria. And it's only 3.5 down if you qualify for it, so it's something you could check on, look into it. And you have to have at least a 580 credit score, which is really low. And if you don't have 580, then you got to put 10% down. And you do need to pay PMI, right? 1.75% up front and a monthly payment on top of that. So they get you on PMI. But 3.5 down payment's not bad. Then there's something called a USDA loan. A USDA loan is actually called the Section 502 Single Family Housing Guaranteed Loan Program. It's a zero down payment mortgage available in qualified rural or suburban areas. It's actually available in about 97% of the country. The 3% it's not available in is essentially in big cities, right? Every super, high populated areas, but essentially like if you're in a fairly big city, it's probably not available there. You should check. Check if it's available in your area, USDA loan, and see if you can qualify. It's for families that are low to moderate income. So you should be like making less than $100,000 to qualify for this type of loan. They actually want people to be under $100,000 to qualify for this, not over. And there's a conventional loan, and I'll tell you why I like a conventional loan in some cases over a VA loan. I like a conventional loan because if you have the 20% down, you won't pay the private mortgage insurance and you won't pay the funding fee that's like 2.15% with the VA loan. So in the long run, you'd save money over the long run with a conventional loan and 20% down over a VA loan. And you would have put some equity into the property. And some people are nervous about not putting equity into a property, me being one of them, and buying stuff no money down. Interest rates of the VA loans, they're going to be lower because of the guarantees that the VA is able to give. So that's great. And you can refinance with a VA home loan. There's two different types of refinances you can do. You can do a cash out refinance. I think you have to pay 0.5% funding fee for that. Or actually, no, I think it's higher. I think it's a higher fee. Yeah, it is. You need to pay a pretty high. You need to pay a higher fee for the cash out refinance. I think it might be like the same fee as the original. And you got to fill a bunch of paperwork. You got to do the inspection again. But you can pull cash out, right? If the house is worth $100,000 more, then you do a refinance for the new value of the house, and you get a brand new loan. But you can keep the extra equity as cash and then spend it wherever you want. And that's awesome. Actually, I wouldn't do that, but some people might say that's awesome. They could take the money and do something else. Now, some people would take the money and invest in more real estate and grow faster. And that might be a smart move. But if you spend it on whiskey and hookers, then that might not actually be a good idea. Male or female hookers, either one, equally bad. So there's also something called a streamline refinance interest rate reduction refinance loan. I think I said refinance twice. The streamline refinance, also known as interest rate reduction refinance loan, that is the one that has a very low fee. You just pay the 0.5% funding fee, and then some very simple closing costs, and you don't have to order an appraisal because you're not pulling cash out. You're simply refinancing to a lower rate. It can happen very fast. It's very easy. Go for it. Last point I'm going to make. Please like this. Please subscribe. Please go to my website and check it out. Give me some comments. Last point I'm going to make. You can assume a VA loan. This is very strange, but you can assume a VA loan. What does that mean? If I had a VA loan, I could let somebody else who would qualify for a VA loan assume that loan from me. They could take over the payments, take over my interest rate, take over my monthly payments, and take over the balance of the loan from me, and it would just transfer to them instead of them getting an entirely new loan and just me paying off my loan and them getting a new loan. Literally could just change the loan over to them. They could assume my loan. That could be very lucrative if I got my loan 3 or 4 years ago and the interest rates have went up a lot and they're higher now. I could sell somebody a loan that has a lower interest rate. So that's very interesting. Something to look into. Two things you want to make sure of. You want to make sure that the bank releases you, of the responsibility to repay the loan if you do this, and you want to make sure that the VA gives you your credit back so that you can get a VA loan somewhere else once you've transferred this VA loan to somebody else. The two things you want to do. That's everything I have on VA loans in this blog post and on this video today. I hope it's been helpful. This is Rich on Money signing out.